So then let's say that I do 1.1 million. What's 1
Now you're at 220 of profit.
You're at 220 of profit. So I'm going to have an additional amount that I have to set aside for taxes on that additional 20,000. So it's not ginormous, but you do have to account for it.
Exactly.
And so what happens during this is where I'm like, how often are people talking with their CPAs and letting them know, or vice versa, what their margins are as the year progresses?
They're not generally. I mean, most CPAs are just doing taxes and telling you what you owe, telling you what your quarterlies are for the next year. But there's not a lot of clients who are meeting with their CPAs quarterly, say. It's much rarer than it should be.
Okay. So I think that's the first thing that people need to do, is to make sure that they have a meeting with their CPA quarterly. Yep. Come prepared with all of your P&Ls and everything else that you have going on, and meet with your CPA on a quarterly basis.
Yep.
That way they can kind of track, hey, this is what the estimates were. This is where you're at right now. We may need to either shave back or increase the amount of money that you're putting in your tax account. Yep. Yeah. I think it's just that simple to do that. And then that way, when we hit the end of the year, you should know, almost, down to the penny of like, okay, here's what my tax liability is likely going to be in April.
Yeah. Because if you're meeting with your accountant quarterly, even if your profit goes up a bunch or down a bunch, your accountant can tell you, okay, hey, you need to pay an extra, or hey, you can skip or reduce this quarter.
Mm-hmm.
So yeah, I mean, it just comes down to the communication and the frequency of it.
Yeah. And by doing that, I think you can also incorporate some tax planning, because if they see, okay, I'm setting aside this much money in taxes, maybe, but I have a build out that I'm going to do, or there's a piece of equipment that I want to do, or I want to acquire, a building or another location.
Yeah.
Certainly. They can give you some projections on like, okay, this is how this is going to affect your tax liability.
Yeah, absolutely. Absolutely.
So of those, like typically, what do you get the biggest deduction on? Do you usually get, like if I'm doing let's say a build out, do I get that depreciation expense 100% in that year that you do it? Or is that spread out over a period of time now?
It's spread out to some degree, but a lot of it is upfront.
Okay.
Yeah, that's a build out's probably going to get you your biggest bang for the buck on dollar for dollar. Equipment's also, you can section 179 depreciate the whole thing at once. That's pretty good bang for your buck. And then just basic things, even like filling up your 401k or simple IRA. That's dollar for dollar reduction right there.